Hello, everybody, and welcome back to another episode of Coast to Coast Lifestyles with myself, Heather Kusipa, with Windermere over in the Seattle area, and Cassie Webb with Elevate over in Mississippi. How's it going today?
It's going good. We actually had a little cold snap, I guess. It was got down to 30 something degrees this week. It was crazy. So we're all adjusting. I have a little cold going on. But yeah, it's good overall.
Oh man, we had the exact opposite last few days. We were up in the 70s, which is high for this area. It was so nice. It was amazing weather. So
Yeah.
sorry to but yeah, we took some of your warm weather and moved it up here. No big deal.
We just traded for a few days. It's fine.
Mm-hmm. Oh man. Well, today we are talking about February stats. We were supposed to do it last week, but we had a little bit of technical difficulties with our streaming software. So we're kicking it off today with stats for February and talking through those and kind of talking a little bit about our spring markets and what we're expecting, whether it be events or the housing market or whatever the case is for individual areas. So you want to kick us off, Cassie?
Yeah. So one advantage to it being this week as opposed to last is that I actually got my regional stats, which I normally don't have in time for our calls. So that is super cool. Give me just a second. I'm actually trying to find where did it go? I lost it. Hang on one second. Sorry about that.
No worries.
For some reason, StreamYard's not seeing my window here.
Oh,
Okay.
interesting.
Yeah, it's weird because it's showing just this one. But anyway, okay, it's fine. We're moving on. So I will show you this first of all. So like I said, these are going to be a little more of a regional. And normally we talk about Harrison County just because it's like the largest sample in my market. However, every month I'm always happy to provide this if anyone would like to see it. But this actually includes Hancock, Harrison, Jackson, George, Greenstone, and Pearl River County. So basically, the whole all of the southern counties of the Mississippi Gulf Coast, which we have 3 that are actually on the coast, and then there's 3 that are 3 to 4 that are above it, kind of depending on how you're looking at it. But anyway, so I like these numbers occasionally because it's just more data. So I feel like it gives you a more broad overview of the overall market here. So our number of sales, you can see these market stats, right?
Mm-hmm.
Okay, perfect. Number of sales went from 420. Last year was at 402. So that was a 4% increase. So pretty, pretty consistent. Our average sales price, which some people were expecting a decline due to interest rates and inventory and going up and things, but our sales price has consistently been creeping up. So 248 and as opposed to 265 this year. So some people don't realize, potentially, even if you bought a house in the last year or so, you could have equity in it, which is, of course, great. I know you're going to talk about your stats and they're going to be very different from these, but so I'm glad I went first, actually. Y'all won't believe Heather's stats. Y'all just wait. Hold it. If you're not from that area, maybe even if you are from the great from Seattle East area, y'all just hold your horses. It's gonna be good going. But anyway, days on market crept up from 51 to 55, and inventory went from 1407 houses for sale in 2023 to 1961. Of course, this is in MLS United. So, that's a lot of increase in inventories, but yet the prices are holding steady. And I really think that inventory, we're really starting to be in a more balanced market, if you will. And then the last thing I wanted to show you, because I can't wait to hear about your updates, is I just wanted to give a little kind of, I'm going to go back to Harrison County, but a little bit of a broader, a more broad overview again, when we're looking at the years. So I really like looking at the sold listings as opposed to the closed. I'm sorry, that is closed, pending. Pending listings number, because the sold data always kind of runs a little bit behind. And so you'll see here, of course, pending listings. This is where we started to have, well, actually, I really don't have an explanation for that one right outside my head, the number of pending listings. But we did have this increase here in 2022. The sold listings, though, here, this is what I want. When people ask me, it depends on the house. Okay, if there's a better time, quote unquote, to list than others. But you'll look, when you're looking at the peak number of sold listings versus like the very, very, bottom of the troughs, if you will, it's not a massively different. It's not when you're looking at this, you're seeing, oh my gosh, all the houses sell in the spring and then none sell in the fall, and then it jumps way back up. You're seeing more kind of, if you looked at it really, if it was zoomed out further because we had a larger number, I mean, it's pretty steady. I think, and this is something we talk about, there could be some advantages to tweaking the timeline for spring or around a particular, event or holiday. That's something we really discussed in the listing appointment based on that particular house, and the features that it has, and who the likely, who's likely going to be buying the house, like when are they going to be looking. So we have a lot of military here, so there's like PCS season. And another thing is, typically this very much correlates with like the number of lists. Like, yes, sometimes there are more active buyers. However, a lot of times there are also more active listings at that time too. So it's like you have more buyers, but you also have more competition. So it's really, and especially since COVID, it's like the numbers haven't quite, I think that's what that big, hump was. Like the numbers haven't quite like found their balance yet over time. The inventory shortage and everything else. A lot of buyers on the fence with the interest rates and things. But overall, I'm super excited about the spring. I think it's going to be a fantastic time to buy. It's looking like maybe that the interest rates might hold off on dropping for a while, which honestly I think it's fantastic for buyers. Whole different topic. But I think that it's a lot of people are starting to come off the fence, and we're starting to see some additional listings and some additional buyers entering the marketplace. So tell me what you got going on, because I know it's a whole different ball game over there. So give us the
Yeah, it's actually really interesting. For as different as our markets are, we usually have a lot of similarities in like, oh, things are a little slower, things are a little faster. But I think that last month's stats are the most polar opposite our markets could have gone. We talked about it a little bit last week when we weren't live, to just kind of like chat through everything. And oh my God, we went off into left field in our market. So let me share my screen here. Should have gotten this queued up first, but.
Heather, do you have any indication of why that might be? Or is it just people are sick of waiting around?
I think it's mostly just people are sick of waiting around. It's people have freaked out about the interest rates, but we've kind of been steady for several months now. And so I think a lot of people that wanted to be in the market, our Can you still hear me, by the way? Sorry, my phone just went off. And okay, cool. My phone went off and my headphones disconnected. But there's a lot of people that were holding off all through last year, waiting to see what happened. Interest rates hit 8% in what was it, October-ish, September, October. And then they went down, but not back to the 3% that everybody was expecting to happen. So they're realizing that the COVID market, the COVID interest rates aren't normal. And so people are like, all right, well, I've been holding off for a couple of years now. Like, I need to buy now. And not only that, but we're super, super tech heavy, and tech is starting to require people to come back into the office again. So there's a lot of people that are moving to the area, a lot of people who are needing to move closer once they moved away because of COVID. Now they're moving back. So it's kind of a mix between a lot of different things. One is absolute need, and another is just, this is normal, whatever. This is life now.
Well, and I love that. Super interesting. You have the cost of waiting, which we went over, I think, on last month's stats. And so I think people are saying, maybe the interest rates will go down, maybe they won't, who knows, and what's going to happen if and when they do. But if they would have been all this time, they've been sitting on the fence in your market, okay, not in mine, but in yours, they could have missed out on $100,000-$200,000 in equity forever, like that. And then the interest rates aren't compensating for that. So it seems like maybe that the message is getting out there that, it's not all about interest rates.
Yep. That's definitely true. And we'll go over a little bit about that in today's stats too, because to start, when we're looking at kind of our inventory and our prices, we're seeing quite a little bit of a shift. So we're definitely seeing, again, more buyers come to the table. And this is February, where we started seeing the oh my God, crazy market. And March has been even more insane. So I'm excited for those stats. But January went from totally dead to February being oh my God, what has happened? Everybody's hair is on fire. And then March is even crazier. But so our inventory is dropping because sellers are still being hesitant. They don't want to lose that 3% interest rate that they have, but buyers, again, are getting desperate. They're needing to move back to the area. They've been putting it off, and they're like, all right, I'm ready, whatever, let's do this. So our inventory is dropping because of that. There's more buyers, less sellers. And not only that, so during COVID, when our market locally started shifting really hard in 2023, where we went down, people were freaking out, didn't know what to do. So our inventory, our median sales price last year for February was $1,050,000. And then this year it jumped 22% up to $1,284,000. And this is for both single family homes and condos in King County, not in King County, in Seattle's east side, which is Redmond, Kirkland, Bellevue, Issaquah, Sammamish, and more, if people know the area. So we jumped up quite a bit last month, and a lot of that is because of multiple offers, which leads me to my next really fun one.
Clear, $200,000. The prices went up in 1 month.
In 1 year.
In 1 year. Okay.
2023 to 2024. Yep.
Okay. So $200,000 is potentially, obviously these are averages, but someone may have $200,000 in equity that bought last year.
Exactly. Yep.
All right.
It's really impressive. And for our local market, the expected appreciation is roughly 5 to 7% a year in a healthy market, which is a lot higher than a lot of other markets as well. But our expected appreciation is typically 5 to 7%. So going up 22% from the year prior is, oh my God, insane.
That's insane. If the interest rates had have taken a significant dip, I can only imagine what that amount would be. It would be very scary. So
it will be insane. I'm looking forward to February 2025, especially if interest rates do go down as far as we're kind of expecting them to this year. It's going to be an interesting market to work through and live through and buy and sell in. But
Yes.
what's interesting is the peak of our market was 2022 at 1,159,000. Yes, we went down, but 2 years later, we've surpassed that by
Mhm.
$130,000 almost.
Mhm.
So yeah, it's been really, really interesting in our market. And the reason for this jump is actually a story told in this chart right here, which is things that are going above list price, at list price, and below list price. So in January of this year, we had only 19% going above list price. In February, we had 39% of sales going above list price. And almost all of those were multiple offers. We
Mhm.
went from open houses having a handful of people coming through, just kind of keeping an eye on the market, what's out there, I don't know, like looky-loo neighbors, things like that, to we have to have multiple people at open houses for safety because there are 60, 80 people coming through in a 2 to 3 hour period. It is ridiculous, quite frankly. It is absolutely ridiculous. And this started happening just probably a little less than midway through the month. Probably about, it's typically about Valentine's / Super Bowl that our market starts to see an uptick. And that's about roughly when we went from this market, this January market, to this February market. So if this only showed the second half of the month, this would have probably been even more extreme. It's just been ridiculous. I don't know if I have seen a jump this drastic before from month to month.
Right.
So yeah, it's been really interesting watching everything. And those that go above list price, the median percent from original list price is 6% above. So you know that there's multiple offers going on. You know that there's competitions and escalations happening in those offers. I'm hearing stories from other people as well of like multiple people are getting 10 offers and all of them are waiving any contingency. They all have escalations. There was one house I heard of that went almost $1 million over list price, which even in the COVID market where we were hearing things going ridiculous prices, we did not hear stories like that. So it's and that one I believe received 30 offers. Like it was just insane. And this is going kind of all over mostly the King County area, but it's just kind of happening all over the place. It's just so strange. But really cool to see. And then going back to what you were mentioning of the potential equity people could have, you're looking at potentially $234,000 in equity for year over year. And even with
interest rate, that's what's mind blowing. Like
right.
all of this, I could totally. I was expecting for your market. I'm certainly expecting for our market to see like some madness going on. But I was expecting that to be when the interest rates took a dip, really even into the fives. You know, is when I think that people are really going to start getting off the fence. So yeah, that's crazy. So that's very unfortunate for the people who waited for interest rates to go down, and now they're like, you know what, they're even higher, but let's go ahead and jump in this thing. So
yeah, and that's the thing too, is you never know what's going to happen. Like we've talked about this before too. The right time to buy is when you're ready. Don't wait for whatever the heck you think the market's going to do, because none of us have crystal balls. None of us know. So it's like
last month you were expecting a strong February, expecting a strong stats for February, expecting a strong upcoming market, but you were not expecting this.
Yep.
there was no way to expect this. So yes,
Yep.
definitely. When's the best time to buy? When you're ready. When's the best time to sell? What's the right time for you to meet your goals? So
Yep.
100%. Although, I mean, in your market, last year was the best time to buy, but
Yes. Yeah. Yeah. It's crazy. Like if you bought this year versus last year, like you're paying almost $2,000 a month more. So it's just, it's crazy. So definitely, if you want to buy today. Don't wait a year. You don't know what's going to happen. And if you're holding on to that asset for more than a few years, likelihood is you're going to see appreciation on it. Like it's just kind of a no-brainer for people who are in the industry, but it's hard to always, communicate that properly to those who aren't. So
yeah, that's the thing is that, you're I just completely lost my train of thought. I'm sorry.
you're good.
What did you just say? I'm so sorry. It was so good what you just said.
That people within the industry understand that pretty well. Like it's an
Oh, yeah.
appreciating asset over
It's an
time.
appreciating asset. And those people that bought in, if my math is correct, 2020, when you had the dip, they only lost money if that's when they sold.
Yep.
So sometimes, yes, you want to evaluate if you know you're going to be selling very soon, you have to sell, and it's going to be a very specific timeline. Then that is something you would certainly talk to your agent about,
Yep.
and get and do research and get guidance on. Because that's, definitely if you're like, I absolutely must sell March of 2025. Well, then
Yep.
let's talk about that,
Yeah.
But anyway, so that was really good.
Yeah, a lot of it is, like you said, it's about your whys. Like, why is that the important date and time? Okay, so if that is the truth, like, let's maximize that as much as possible.
Yes, because if they did unfortunately have to sell in that little dip, yes, they may have had a loss or they may have not had equity gain. But if they'd held out until now, like they'd have substantial equity, and who knows what their equity would be next year if they didn't have to sell in that little dip in the market. But
yeah, it's it's really, it's going to be an interesting spring too, because with our market starting off this strong, it's likely going to continue. And then once interest rates drop, it's going to be a frenzy, and it's going to be really interesting to see what happens and how our prices change and how the multiple offer situation changes. And that 39% that we saw of, things going over list for median of 6%, how is that going to change by this time next year? So I'm really excited to see that and what the spring is going to bring, especially spring, summer, fall, when interest rates start dropping. But the only other thing I wanted to point out was this, simply because I believe most markets have 0 to 4 months as a seller's market. We shift ours. So we're actually 0 to 2 months is seller, 2 to 4 is balanced, and 4+ is buyer. And I'm not entirely sure why that is, but the psychology of our area is just weirdly different. So if things sit for more than a month, people start wondering, what's going on with the market? What's wrong with this house? What's happening? Like, what's going on? And if it sits for more than that, it's either a dump and nobody wants to buy it, or overpriced, or whatever, or it's a multi-million-dollar listing that, the average person can't afford. And that's about it. So as you can see, most of our area, with the exception of these 2 tiny little places right here, are seller heavy markets. So, and we expect that to continue. In fact, both of these areas I expect to also add to the seller's market in the next couple of months. So,
right.
But yeah, so that's about it with mine. It's a lot of stuff, a lot of interesting numbers, but I'm excited to see what happens. Sellers are definitely going to be at an advantage this summer. Buyers, you still got a chance, but you should expect for your offers to be more seller friendly.
Right. Absolutely. But if your market consistently stays strong, well, yeah, the whole, they're going to buy in a seller's market, but hopefully they'll be selling in a seller's market too, and with all their increased equity. So, I mean, it's not, it means that seller's market, buyer's market is what it is. It's not good or bad. It's just affects kind of how both parties negotiate and things like that. So that is super exciting. And yeah, definitely different for ours. So yeah, so next week we're gonna have our reveal. You put finished remodel, we're gonna use that term loosely. I'm sure there will still be some odds and ends that we will be working on, but I think you'll get the gist of how it turned out. So super excited about that. And we super missed you guys last week. Thank you for hanging in there with us this week. And so we kind of had to double up, and it's a little longer than normal, but excited to see you guys again next week.
Yay, very excited. We'll see y'all next week.
Bye.